Hello, this is the Daily Forex Report for November 11th. We are looking at the U.S.-Japanese yen pair. This pair created an inside bar during this past session, did close up. However, we are looking for it to continue to move to the upside. Look for it to hit some resistance around 82.80, possibly moving down and hitting support around 81.95. Now the Euro-USD pair, this pair broke and closed below previous support levels. Overall, long term, this pair is still moving sideways. Look for it to potentially go as high as 139.01, possibly as low as 135.01. Look for some resistance around 138.25 and look for some support around 136.25. Now the pound US dollar pair, this pair closed up just barely by basically one pip. Created a doji, could see a reversal happen off of this, so be aware of that. Look for it to potentially go as high as 162.58, possibly as low as 160.09. Look for some resistance around 161.75 and look for some support around 160.75. Now the US Swiss, this pair closed higher, did break the previous session's high but pulled back a little bit. Pretty much moved up for the past several sessions. This pair overall moving sideways, biased up right now. Look for it to potentially go as high as 198.62, possibly as low as 0.9607. Look for some resistance around 0.9795 and look for some support around 0.9650. Now, as far as news analysis go, we have the Eurozone releasing their gross domestic product for the third quarter. At 5 a.m. Eastern Time. Consensus on that is that it has dropped a little bit from 1.0% to 0.5%. We also have the U.S. University of Michigan's confidence report for November being released at 9:55 a.m. Eastern Time. Consensus on that is that things have improved a little bit from 67.7 to 69.0. Now, what are we looking for over this next section? Well, I want to show you more of a chart pattern that you need to be aware of. We have basically looking at the U.S.-Japanese yen pair on the 4-hour time frame. Grab your Fibonacci retracement levels, and you can do this on any time frame. Grab it at the bottom and then go up to the high. Basically what you're looking for, a lot of people call this a 1-2-3 pattern. You moves to the upside pretty strong, then it pulls back, and then you're looking for it to move up that third level. Now what you want to look for is a retracement back to the 23.6 level, and at that point you want to look for it to move higher back up to this area. You can see that this one is starting to do that, or has started to do that, but hadn't quite made it there as of yet. We are going into the quiet times of the market. Ideally, you would see this pattern during the hot times of the market. Since we're on the 4-hour, that's not as big of a deal. The other thing that I want you to note is that we have this cup and saucer kind of action going on, so that you could look for a potential, especially if this closes down, a potential of a break here of this trend line and look for it to come back up to that point. Putting a stop loss at the 38.2 is pretty wise, but in this scenario, had you bought right here, basically right here, once the bar pulled back, buy right here, you would put your stop loss here, but now that you have this low here that's been created, I'd put it right here, so that you basically move your stop loss up, so if it comes down you hold less risk, but if it moves higher again, of course you can take profit off of that. And just to show you what that looks like, that'd be a 52 pip trade there, a little bit, yeah, 52, 53. Risk would be about 30, 34, so that's a good, pretty decent risk to reward. However, if you moved it up a little bit, it'd be about 25 to 50, so that would be, a 2-to-1 type scenario. Definitely what you're looking for. Well, Well, that about wraps us up for today. Until next time, this is Jason Fielder. Good trading.